Good afternoon, grade 12s. It's me again, Hector S. Nkosi. I'll be taking you for accounting. This is our day 2. No, actually, this is our day 3 with me because today it's Wednesday. We are still looking at stock valuations, guys. Remember stock valuations, it's part of your paper 2. Remember this year, you guys are the first group to write your accounting paper in 2 papers. Before all the years, when you look at the past papers, accounting only had 1 paper. But you guys are the first metrics ever in the history of accounting. You'll be having 2 papers, both paper 1 and paper 2. So the chapter that you are looking at the whole of this week is stock valuations, and it forms part of your paper 2. Now, boys and girls, if you've got any questions, you can always type your queries in your chat in the chat box. Or if you've got any other further questions that maybe they are accounting related, you can always email me at nkosihector288@gmail.com. Right. Okay, guys, let's start. Yesterday, basically, we looked at our FIFO method. Today, we are looking at the weighted average method. Tomorrow, we'll be looking at the specific identification method. Then on Friday, we'll be looking at the past paper question. Maybe on Friday and next week, Monday and Tuesday, we'll be looking at the past paper exam questions. Then next week, Wednesday, we start with the new chapter again, of which is manufacturing, right? So basically, guys, now I want to take you straight to the worksheet that I've designed. So basically, I need to go to that document. So I need to stop sharing and reshare. So I need to stop sharing and share the screen again. Aha, here we go now. Okay, cool. Just need to increase my screen a little bit so that it can make sense. Okay, cool, boys and girls. So now, today we'll be looking at our weighted average method. Yesterday, we've dealt with FIFO. We said the stock that is bought first, it will be the stock that will be sold first. But now, and we said now for FIFO, it's for the goods that they expire, basically. The goods that have the expiring date and stuff, right? I made an example about milk. I also made an example about what you call about bread and stuff. So FIFO, we looked at those goods basically, right? But now I want us to look at the weighted average method on how do we value the what you call the stock, right, of weighted average using the weighted average method. All right. Now, under FIFO, guys, we know that under FIFO, I said basically in your FIFO method, it's basically your non-durable goods. And what are non-durable goods? Are goods that are soft or those goods that have the short life cycle or lifespan. Basically, FIFO will always use I mean, your non-durable goods will always use FIFO. But durable goods, we talk about those goods that last forever. Uh, um, when we talk about goods that last us forever, we talk about clothes. You can't say you only wearing your clothes for 30 days, but you can use the food for 30 days. Does it make sense? But the clothing, the furniture are those durable goods that they last forever. So basically, we need to know how to value those goods using weighted average method. It says here, your weighted average method is used when lot of stock is bought in small quantities, right? So when now also the lot of stock is bought in small quantities, right? Now, also the average price is a good composite picture of the cost of goods, basically. So basically, when we say lots of stock bought in small quantities, we see, let's say now I'm selling apples, right? So now, since okay, I won't use apples, but let's say I use clothing. Let's say I sell clothes, I sell t-shirts, right? So it's a lot of stock that is bought in small quantities. So now when I'm selling shirts, let's say I buy shirts now and then, right? But shirts, clothing, guys, does not expire, right? The shirts that I have in stock in May, I can stock more in June, I can stock more in July, right? I can have the very same shirts in 5 years' time. I can have the very same shirts in 6 years' time, in 10 years' time. So now we can't say the stock that is bought at first will be sold at first. So with those shirts, we can average them to get the what? To get the cost price when we're doing the stock valuation at that point in time. So the average price gives a good composite picture of the cost of goods because we're basically averaging all the costs that we have incurred so far, right? Then it says the influence on the average price will be the minimal when only a few items are bought. For example, you had 500 in stock at an average price of 10 Rand. So 500 times 10, it will be 5,000. And you bought two at 50. So it will be 100 Rands. So in order for you to calculate your average price, you'll always take your total value, right? Your total purchases, how many purchases you had? You had the purchases of 5,000, right? And the purchases of 100 rands. So it's 5,000 rands and 100 rands, and it was 1,000, it was 5,100. Divide by the total number of units you have purchased. Now, your average price, your weighted average price now at this point in time, it will be 10 Rand 20 cents, weighted average price. However, the price of two items bought for 50 Rand, right? Each will be undervalued at 10 Rand 20 cents each. Now, if we scroll down, here it says to us, however, when you had two in stock at an average price of 10, right? Right? Two in stock at an average price of 10, that's going to give you 20 Rand. And you purchase 5,000 at 50 Rand, you're going to have 25. The average price will be considerable. But the price of 50 Rand per item is now showing at or as 49 Rand 84 cents. Because now, how did we get that? We said 20 rands, of which is this one, plus 25,000, of which it was this one. A rand plus a rand, it will give you 25,020. Then we must divide with the number of the units, right? Here you had 2 units and there you had 500 units. Therefore, 2 plus 500 is 502. Therefore, 25,020 divided by 502 units, you'll get 49.84 cents weighted average per item. Hope it makes sense. So, at the end of the year, when the closing stock value is determined, the average price will be used to calculate the value of the closing stock. So basically, your calculation of the closing stock will be your 100 units that are left in stock multiplied by the price, by the average price per unit of which is 49 rands 84 cents. The total will be 4,984. Now, the average cost of a product is calculated by dividing the cost of units by the total number of units. So basically, this is your what? This is your formula for weighted average method. Cost of the units divided by the total number of units. Sorry about that. Okay, cool. I just want to highlight this to you so that it can make sense. Just want to highlight this about the weighted average method, basically. All right. So the weighted average method, it's always it's the cost of a product calculated by dividing the cost of the units by the total number of the units. So the cost divided by the number of units. Right. Weighted means that the more stock you buy, the greater influence on the answer. E.g., you bought 100 cans at 1 rand, it will be 100. You bought 150 cans at 120, it will be 180. So in total, you bought 250 cans, right? And this is the number of units because cans it's unit. And you had what? The cost of 280. Therefore, now the calculation for the average price, it's what? Is your cost over total number of units. What is your total cost? Your total cost is 820 divided by the number of units of 250, and a can per unit will be 1 rand 12 cent per unit on average. If 200 cans were sold, 50 cans will be in stock and they will be valued at 1 rand 12 cent per unit. The value of the closing stock now, it will be what is left multiplied by the average price per unit, and it's going to be 56 rands. I hope everything is making sense. Welcome to those who are just joining us. I can see Odwa, I can see Sonia, Jadida, Candice, Mundli. Welcome, guys. Welcome. We are doing stock valuation. Remember, those who are just joining us now, stock valuation is part of your paper two in accounting paper. Remember, guys, you are the first metric class to have two papers when it comes to accounting. So you need to know which chapter falls to another, to which paper, to say. So stock valuations has three methods that you need to know: your FIFO, weighted average, and specific identification method. For the past 2 days, I've explained FIFO. Today, I'm looking at the weighted average for those who have just joined us today. Tomorrow, I'll be looking at still stock valuation, but the specific identification method. Then on Friday and next week, Monday, Tuesday, we'll be looking at what? We'll be looking at the past paper exam questions based on stock valuations. And you need to know all the three methods, because you don't know which one they will ask. They can either ask FIFO, the examiner can ask weighted average, or the examiner can even ask your specific identification method. Remember, stock validation is all about at what price will you value the closing stock. Don't forget that. Because you want to validate what? You want to validate your stock, right? So it will be always at what value. The system that you choose depends on the stock that you sell, basically. That's what I've been explaining earlier on. Now, guys, I want us to do this activity 5. But now I need to go to the full one, activity 5. Just give me a second. Activity 5. Activity 5. Okay. I want us to do this activity, guys. All right. This is the activity I want us to look at. So now, it says here, basically, you are given these calculation. You were told that you bought 10 units at 5 rand, and it's 50 rands. When you say 10 units multiplied by 5 rand, you get 50. In Feb, you bought 15 units at 7 rand, and that's 105. In March, you bought 12 units at 7 rand 50, that's 90 rands. Therefore, in total, you have bought 37 units for the year, right? And at how much? At 245. And you only sold how much? You only sold 25 units at 12 rand per unit. Therefore, you have sold units that cost 300 rands, because when you say 25 units at 12 rand, it gives you 300. Now, number one says to you, what is the number of the unsold units? So we did this one yesterday with weighted average method. With the FIFO method. They can ask you the very same question under weighted average and say, what number of unsold units are? Basically, it's like, okay, you bought 37, you sold 25. So 37 minus 25, you're going to get the unsold units. So basically, what you need to do, you need to say 37 minus 25. The units that are on hand, the unsold units, are 12 units, basically. So the number of unsold units are 12. Number 2. If we look at number 2, number 2 now says to you the value of unsold units. Number 1 was asking the number of unsold units. Number 2 is asking the value of the unsold units. Please, guys, do not mix things up in an exam. Don't you ever mix things up, because when you mix the things up, it's going to be a problem a lot. So always listen to the examiner, what the examiner is trying to say. Are they looking for the number of the unsold or the value of the unsold? Value means money. Number is just numbers of units, right? So the formula for underweighted average for the unsold units, you need to get the average price first. After getting your average price, you must multiply it with the number of unsold units. But how are we going to get our average price? Our average price is always total cost divided by total number of units. What is our total cost? Our total cost is 245. What is our total number of units that we have purchased? It's 37. So your average price, it will be 245 divided by 37, right? So basically, it should be 245 divided by 37, and each unit on average will be 6 rand 62 cents, right? Then now, the value of the unsold units will be 12 units of the unsold multiplied by the average price of 6 rand 62 cents. Therefore, the value of the unsold units, it will be 79 rands 44 cents. Perfect. Number 3, cost of sales. Now you need to calculate cost of sales. So basically, you must calculate your cost of sales. Remember, cost of sales depends on your sale. You can only calculate cost of sales based on what you have sold. How many units have you sold? You have sold 25 units. At what price? At cost price of 6 rand 62 cent. So it's 25 multiplied by 6 rand 62 cent, right? That's your what you call your cost of sales. Because now we said we sold 25 at a cost price, because you're calculating cost of sales, not selling price. So this will be your solution. 25 units at 6 rand 62 cents per unit using the average price. Therefore, your cost of sales will be 165.50, right? So you can leave it like this unless otherwise stated, unless maybe if the examiner says to you, round it off to the nearest rands. But if the question is silent, always, this is money, you can always round it off to to 2 decimal places, because we know that money can be rounded off in 2 decimal places because of cents. All right. Okay. All right. Let me scroll down. Gross profit. We know how to calculate gross profit by now. Gross profit, if you know your income statement, you've dealt with your income statement in term 1. You've dealt with your income statement in grade 11 and grade 10. So by now you know how to calculate gross profit. Gross profit is always sales less cost of sales. You know what your sales are. Your sales are these ones were given. It is 300. So it's always 300 minus your cost of sales, and your cost of sales, it was 166. Therefore, your gross profit, it will be 134. Right. Now I want us to look at the 2 accounts. Remember now, in grade 11, you have dealt with the inventory systems. In grade 12, you are dealing with the inventory valuations methods, right? How to value your stock. In grade 11, you dealt with systems. But in grade 10, you have dealt with a perpetual inventory system. In grade 11, we then added periodic inventory system. So both of these 2 accounts, basically they are helping you to get what? To get your gross profit. But they've got a different format. Just a second, I just want to drink my water. Okay, sorry about that, guys. I just had to drink water. So now, basically here, this one, we introduced it in grade 10. Right? This is what we introduced in grade 10. The trading account of a perpetual inventory system. Sorry. So it was the perpetual, inventory system. In grade 11, we introduced a trading account of a periodic inventory system. This was grade 11, right? Remember the purpose of your trading account. It's your final account. So it's not trading inventory account, but is the trading account. Meaning now trading account is your final account, is the account that is helping us to calculate either cost of sales, or gross profit. But most of the time it's helping us to calculate gross profit. That's the purpose of a trading account, not trading inventory account, boys and girls. Please, grade 12, because I know, guys, majority of the learners, they like to mix trading account and trading inventory account. Those are two separate accounts. Trading inventory account, it's an asset, it's an inventory account. It's when you buy new stock, you're going to record it under trading inventory account, right? But your trading account, it's your final account, the account that helps you to calculate your gross profit in two inventory systems. In grade 10, we've dealt with trading with perpetual inventory system. In grade 11, we introduced a periodic inventory system. So the examiner can ask you a trading account of a perpetual or a trading account of a periodic inventory system. You need to know how both of these trading accounts work, but at the end, you're going to get the same answer. Now, let's start with the trading account of a perpetual inventory system. This one is the easiest. You've dealt with it in grade 10. You always debited your cost of sales by 166. You always credited your sales, right? Then your balancing figure, it used to be your gross profit. But we don't have an account that is being called gross profit. So the name of the account, we know that gross profit must be closed off with which account? Profit and loss. So you don't have an account that is being called gross profit, but you call it profit and loss. Because if you were to open your profit and loss T account, this will be when you apply your double entry system, this will be on your credit side. And your cost of sales, remember when you open your cost of sales, your cost of sales, guys, your cost of sales, it's an expense. You always debit your cost of sales, isn't it? And you close off your cost of sales with your trading account on the credit side. Then the double entry, the one that comes to the debit side. Same applies with your sales. Your sales, if it's your cash sales, you always going to credit bank with 300, then close off your sales on the debit side by trading account. When you do the double entry system, it will be on the credit side of the trading account. I hope it makes sense, boys and girls. Now, let's look at the periodic inventory system. The periodic inventory system, you have dealt with it in grade 11, right? It's the one that says opening stock plus purchases, carriage on purchases, sales, right? And your closing stock. Now, your opening stock, if you have any opening stock, you must put it here on the debit side of the trading account. The purchases, your net purchases. Remember, purchases said net purchases. If you had returns, you must subtract them. So you must always have your net purchases. But in this case, we don't have any returns. So our total purchases was 245. We don't have any carriage on purchases here, right? However, we have what? We have sales on the credit side. And your closing stock, we have calculated it, it was 79 rands. So basically, you have to add 1, 2, 3, add 1, 2, 3. Then your balancing figure, it's always your gross profit of which it goes through profit and loss, isn't it? And it's 134. So guys, the bottom line is you must know how to do a trading account of an periodic inventory system and a trading account of a perpetual inventory system. Now, I want us to look at this one. This one, guys, you have the opening stock. You bought 50, on the 15th of Jan, you bought 10. Then on the 14th of Feb, you bought 15. 31st of March, you bought 12. So in total, you have 57 units. At how much? At 325, boys and girls. And you have only sold 35 units at 12 rand. So your sales already are given at 420. Now, let's start with the first one. The number of unsold units. Remember, if you want the number of the unsold units, you're always going to say the total number of units that you have, including your opening units, because the 57, we got it by saying 20 plus 10 plus 15 plus 12. It's 57. So it's your 57 minus your 35 units. So because 35 you have sold, you must take it out so that you can get the unsold units. And now 57 minus 35, how much are you going to get? You're going to get 22 units. 22 units are unsold. Or alternatively, what you can do, you can tick. You can say, okay, I've sold 20, I've sold 10, that's 30, which means here I've sold 5. What was remaining here? 10 plus 12 is 22. You can also get your answer like this. Right. Now, the value of the unsold units now. The value of the unsold units. That's where you're going to apply your weighted average method, your WAM. We call it a WAM, weighted average method. Right. That's your weighted average method. And remember the formula for weighted average method says your total cost divide by your total number of units. What is your total cost? Your total cost is 325, this one. Divide by the total number of units is 57. Therefore, your average price is actually 5.70 per unit. Now, your value of the unsold, therefore, you need to say what? You need to say, okay, the value of the unsold, basically, we know that is 22 times my average price of 5.70. Therefore, the value of the unsold will be 125.40. Cost of sales. Now, with your cost of sales, remember with your cost of sales now, guys, you have sold 35 units at what cost price? At 5.70. Therefore, your cost of sales will be 199.50, and that's the same as 200. Therefore, your cost of sales will be 200 rands. Then gross profit. Remember, gross profit is always sales less cost of sales. Here's your gross profit. So your sales, it was 420. It was given, right? Because we were told that we sold 35 units at 12 rand. Our selling price or our sales was 420. Therefore, you need to say 420, your sales less your cost of sales. You have just calculated your cost of sales as 200. Therefore, your gross profit is 220. Okay, boys and girls, that's the end of the lesson. From me, today we'll be doing this. Tomorrow we'll be doing the specific identification method. Then on Friday, we'll be looking at the past paper exam question. Next week, Monday, and next week, Tuesday, we'll also be looking at the past paper exam question. Okay, that's for me, boys and girls.